Welcome to this explainer. If you're a focused learner looking to finally level up your trading game and honestly just stop guessing when it comes to the markets, well, you're in exactly the right place. Today, we're going to completely transform how you look at market charts. We're taking all that confusion right out of technical analysis. By the end of our time today, you'll have a crystal clear framework for mastering trend lines and pinpointing those perfect high probability entry points. But first, we really need to talk about a painful reality. If you've been trading for any amount of time, you've probably asked yourself, why on earth do so many trendline breakouts fail? I mean, you've been there, right? You see the price cross the line, your heart starts beating a little faster, you hit buy, and then immediately the market reverses. It whipsaws right back the other way and takes your stop loss with it. Those frustrating fakeouts are basically the absolute bane of a beginner trader's existence. You end up feeling like the market is literally out to get you. Well, spoiler alert, it's not. It's just that you've kind of been taught the wrong way to look at these critical boundaries. So here's our agenda for today. First, we're going to talk about why we need to stop drawing messy charts. Then we cover the ideal trend line. After that, we'll get into finding your entry points. And finally, the pro zone strategy. Okay, let's dive right in. Section 1. Stop drawing messy charts. Look, overcomplicating your screen is a massive hurdle for almost every beginner trader. Honestly, it's the fastest way to just completely paralyze your decision-making. So before we fix the mess, let's establish a rock-solid baseline. What actually is a trend line? Well, at its simplest, it's an area of support or resistance that connects obvious highs and lows during an uptrend or a downtrend. Think of it like this. Markets don't just shoot straight up or drop straight down in vertical lines, right? They move in waves. In an uptrend, they push up, take a little breath, pull back, and then push up again. That repetitive breathing motion is what creates distinct highs and lows, and we use those specific points to anchor our trend lines. It gives us a visual map of the market's momentum. But here's where things go wrong. The amateur approach is to pull up a chart and draw a line connecting every single tiny blip and movement. People draw way too many lines. They end up connecting highly insignificant minor highs and lows that the broader market honestly just doesn't care about. And what happens? You create this horrible, unreadable chart that looks like a tangled spider web. Simplicity is absolutely key here. If a line isn't glaringly obvious to you, it's definitely not going to be obvious to the millions of other traders and algorithms out there moving the market. Moving on to section 2, the ideal trend line. So let's just wipe this light clean and look at the proper methodology. If you want a real trend line, gold standard for validating a trend, this is exactly what you need to look for on your charts. Step 1. Zoom out slightly and only, and I mean only, find the absolute most obvious tops and bottoms. Step 2. You need 3 clean touches on that line with good visible space between each touch. Look, 2 touches, that's just a guess. That third touch is the market actually confirming the trend is real. And step 3. Look for a near 45-degree angle or less. Why? Well, if a trend line is pitched up at a super steep 80-degree angle, it's parabolic. It's totally unsustainable. A 45-degree angle shows healthy, steady, and much more reliable volume and momentum. Now, here's a highly practical pro tip for you, just so you don't panic when you're looking at a live market. Ideally, you want to use the extreme tips of the candle wicks to draw your line. But as we all know, the market isn't perfect. Sometimes, a candle body will close slightly within, or even across the trend line, before the price reverses. And you know what? That is completely acceptable. Please don't throw away a perfectly good trend line just because one candle got slightly out of bounds. Keep your focus practical. Remember, it's an area, not an impenetrable laser beam. Section 3. Finding your entry points. Drawing the lines is really just the preparation phase. Knowing exactly when to put your money on the line, that is the absolute core of your trading strategy. When the price approaches your beautifully drawn trend line, you have to watch its behavior closely. I like to call it the smooth versus the aggressive approach. Let's use a real-world example here. Imagine you're trading Apple stock, and the price is just gliding down towards your uptrend line. If it's smoothly approaching while still making higher highs, you can reasonably expect a bounce. But if that same Apple stock is suddenly slamming into your line on heavy volume and the previous peaks were clear lower highs, well, the bears are gaining strength there. You need to expect a break. Do not try to catch a falling knife. So let's say you spotted that aggressive approach. The price crashes right through your trend line, a real breakout. So what do? Do you hit the button and enter the trade immediately? No, absolutely not. Never, ever rush the trade. This is exactly where beginners get slaughtered by those fakeouts we talked about earlier. Listen, in technical analysis, There is no such thing as an absolute certainty. If you blindly enter a trade, the exact millisecond the line is crossed, you're not trading, you're gambling. You have to wait to confirm the move. So here is your real-world step-by-step entry protocol. This is how you trade like a snapper rather than a machine gunner. Step 1. Just wait for the break to happen. Seriously, just sit on your hands and watch it. Step 2. Let the price return. For example, drops below your support line, it almost always rallies back up to retest that exact same line. That line, which used to be support, flips to become resistance. Step 3. Look for the rejection at that retest. Then, Step 4. You enter the trade. You now have solid confirmation that the trend has actually changed. Your risk is low and your confidence is high. Alright, Section 4. The Pro Zone Strategy. Now that you really understand the patience required for a perfect entry, let's graduate you from beginner to professional. The solution to a lot of our charting problems is the rotated rectangle tool. Most major trading platforms have this built in. Instead of drawing a thin, brittle line using the standard trendline school, we're going to use this rectangle tool to fundamentally change how we map the market. So why does this seemingly simple tool matter so much? Because it transforms thin lines into thicker zones. Remember earlier when I mentioned that the market isn't perfect and candles sometimes poke through? Well, a thin line gives you a binary pass or fail signal, which honestly just causes anxiety. A thicker zone, on the other hand, accounts for real-world market volatility. It gives the price room to breathe, to poke in and out a little bit without actually breaking the structural trend. By trading around a zone rather than balancing on a tightrope, you will drastically reduce those frustrating fakeouts that constantly steal your capital. Let's tie all of this together into the ultimate professional entry strategy using a practical real-world buying scenario. Step 1. Spot a trendline zone utilizing your rectangle tool, making sure to confirm it has 3 obvious touches. Step 2. The price pulls back, but instead of buying blindly, you wait for a retest dipping into that thick zone. Step 3. You don't guess. You wait to see bullish price action. You want to see something like a strong hammer candle rejecting the bottom of your zone. And Step 4. With your risk clearly defined right below that zone, you confidently enter your long position. You waited for the setup, you used a zone to avoid the trap, and you executed based on clear confirmation. When you start drawing your charts with this kind of disciplined, zone-based approach, connecting higher highs and lower lows properly, something pretty amazing happens. Your screen stops looking like random chaos, and larger, highly predictable chart patterns will automatically start forming right before your eyes. You'll start seeing triangles, wedges, and channels naturally appear. But that leads us to a fascinating question. Once you master these trend lines, what specific, highly profitable chart patterns will they reveal to you next? Well, that is a whole new layer of market psychology to explore. Thank you so much for joining me on this explainer. Stay focused, keep practicing those zones, and I'll see you next time.